Government and Nonprofit Accounting 422, Chapter 11. In Chapter 11, we discuss audits for government and nonprofit entities. So the different audit rules, why these entities get audited, and some things that are unique to government and nonprofits that are not the same in for-profit business. So why do we have audits? It's really to look at the financial statements of a company that are presented to the public, to external users for decision making, to be sure that they have followed all of the rules they're supposed to rule and that their financial statements are presented fairly. So our auditors, under generally accepted accounting principles and other principles of auditing, will express these opinions. So different kind of rules that we have is we have generally accepted audit standards, and the generally accepted auditing standards come from the AICPA. Additionally, we have standards issued by the Government Accountability Office, the GAO, which are the Generally Accepted Government Auditing Standards, or GAGAs. And then we have the Single Audit Act, which covers a specific type of federal money to general purpose governments. So the Generally Accepted Auditing Standards, or GAS, are state that, much like for-profit entities, that audits must be performed by independent public accountants, or they can choose to use the state or federal audit agencies. For example, a city government, K through 12 schools, nonprofits in the state of Iowa can be audited by the state auditor's office. Okay. Those auditors are required to follow the generally accepted auditing standards rules. When looking at the auditing standards and the requirements for this, so of course that the auditor has to adhere to all of those auditing standards, but they also need to be able to prove that they are qualified to perform an audit and that there is independence. So remember, what independence in an audit looks like is that we aren't using the same CPA firm to audit us as we are to prepare our financial records. And at the end of the chapter, we're going to talk about a couple of those kind of gray areas around independence things. Okay, so in our audit process, first we have to determine what is the appropriate GAAP. Are they using, are they using FASB? Are they using GAAP? Are they using GASB? To think about which rules they are using. Then you have to establish scope. How big do you want the audit to be? What kind of audit are you looking for? What are the audit procedures going to be? Then we have to determine materiality. So the materiality is that level for misstatement. If you remember from other accounting classes, that materiality is subjective. So well, $50 may be material for one company. It could be $5,000 or $50,000 for another company. So it's very subjective, and that's why it's important to determine as an audit team. Then once that's done, you're going to conduct your audit examination, pull your samples, review your samples, and then the opinion would be issued. For that materiality, as I said, you have to determine this for every single opinion unit. So we have to look at the governmental activities, at the business type activities, and every major governmental and enterprise funds. Then there are other types of funds that can either be presented as a group or have to be separated out and presented individually. Our audit report is going to include information about how they're an independent auditor, the management's responsibility for the financial statements, so that MD&A that the managers have to write, the auditor's responsibility, then the opinion. Other information that can be included can be required supplementary information. Okay, but the main thing being that opinion, and is the opinion going to be that yes, they are fairly presented financial statements, or no, and they're not for these reasons. So we have these 4 different types of opinions: unmodified, qualified, disclaimer, and adverse. Okay, so the unmodified means that that the financial statements do present fairly in material respects the financial position of the entities that are being reviewed. A qualified opinion is that there's something that they're pulling out. Okay, where it's not an unmodified opinion, there's something that they just want to bring up or tag, such as yes, fairly presented with the exception of this statement or this business entity or this, except for this particular thing. Disclaimer and adverse opinions then are going to be negative opinions where you would say, no, they were not following the rules of accounting that needed to be followed. Okay, for reasons that an organization would get an unmodified opinion would be like there was material departure from GAAP, so they were not following generally accepted accounting policies. There was a material change between accounting periods and method of application. So in 1 year they used one rule or method of application, and they significantly changed that without disclosing it. So it's not that accounting principles or method of application can't be changed. It's that when entities make that change, it needs to be disclosed and explained. Okay. Or there were conditions that limited the scope of the examination. Evidence wasn't forthcoming. They couldn't get access to everything they needed in order to make that unmodified opinion. So government auditing standards, or GAS, and generally accepted government auditing standards, those are issued by the Government Auditing Standards, or the GAO office. Okay. We have multiple different kinds of audits. So when we're looking at what type of audit, when we think what has to be included in that statement of work, that letter about what kind of audit that we're doing, is it a financial audit, an attestation audit, or a performance audit? And so a financial audit is really just are entities reporting financial information, and is it being presented fairly? Where an attestation engagement is to measure or evaluate looking at criteria. So there are 3 different kinds of attestation arguments. So examination, review, and agreed upon procedures, looking at very specific areas. And then a performance audit is looking at performance evaluation. And performance evaluation audits are generally used to, one, just effectiveness and results, but also as a kind of consulting tool of what recommendations can you give us to improve what we're doing so that we have improved performance. Okay, so the list of general standards for the government accounting or for the government audit standards, we have a little bit different rules. So one, still independent. The auditor must be independent. Professional judgment. Auditors must use professional judgment. They must be competent. In fact, if part of that competence requirement says that so many hours of the CPE conducted by the auditor has to be done in government accounting. So they have to, so at least 24 of the 80 hours done every 2 years has to be focused on government accounting, government auditing procedures. Quality control and assurance, so the audit organization must have quality control standards in place and have external peer review every 3 years. Okay. Other requirements, so through different rules, are the things that they have to look at. So different things about like quality control and peer review, looking at compliance with standards, following licensing and certification requirements, how auditors communicate, the results of any previous engagements, if there are investigations of legal proceedings, non-compliance with provisions, regulations, contracts, and grants, any audit documentation, and internal controls. Okay. So that just the internal controls, of course, should be the auditor's testing of internal controls. Auditors should look for these different issues when they're performing an audit. Are there any non-compliance issues? Are there issues with internal controls? Are there licensing and certification issues? The ethics and independence for is that GAGAS outlines basic ethical principles that auditors should be following. So public interest, integrity, objectivity, proper use of government information, resources and position, and professional behavior. So when looking at a governmental entity's financial statements, you should be thinking about how you are protecting the public interest. How are you protecting the fact that this is taxpayer money, this money is designed for public purpose, and then looking at it objectively and with integrity, so being ethical and using professional judgment to make sure that governments are properly using their resources to take care of their public interest. For independence, we have to, of course, maintain independence. There is a conceptual framework for independence that helps auditors to see if they are truly considered independent under GAGAS standards. If the threats are considered significant and can't be eliminated, then they should decline to perform the audit since independence has been impaired. Okay, and that framework for independence, you can see in your textbook, there's a question, there's a decision tree. So, for example, is the threat related to a non-audit service? Is the threat significant? And then yes or no, you go to the decision tree. If you then get to the different options are independence is impaired, do not proceed with the audit, or you may proceed with the audit, that independence is fine. Okay. So in thinking about this audit, we have non-audit services. So this is when we're auditing a group and they've come to us and asked for additional services. So this is when issues of independence can arise because of what we've been asked for in those non-audit services. So this can be things like giving us suggestions, looking at performance evaluation. The auditor would have to, one, determine are any of those service requests affecting independence, and if yes, then they should refuse to do them, and if no, it doesn't affect independence, then they need to disclose that information. Okay,